And we are recording. Okay. Good morning, good evening, whatever the case might be to everyone. I'm Jim Sugarman. I'm one of the co-founders of 4Gen Now. And thank you for joining our webinar series. Very happy to have as a presenter today, Michael Knight, CEO of Prime Capital Connections, based in Denver. And I've had the pleasure of working with Michael for the last year on and off. He has been and remains one of the earliest supporters of 4Gen Now, not just for Denver, but with his wise counsel, helping us expand throughout the U.S. And Michael, I'm very, very proud to say, has become a dear friend. So without further ado, I turn the webinar lead over to you, Michael. Thank you.
Great, and I echo good morning or good afternoon to wherever you are across the U.S. or outside the U.S. for that matter. I'm a serial entrepreneur. If you go to my LinkedIn site, you'll see that Prime Capital Connections, which is my current company, is number 6. I had nice exit strategies from company 1, 2, 3, and 4. Unfortunately, my startup number 5 was going to be a roll-up of the nation's mortgage industry. And 3 weeks before our IPO on the NASDAQ in the fall of 2008, everybody knows what the implosion was. It all turned into a house of cards, so to speak. That was very bittersweet because it would have been by far the biggest and most rewarding one that I had. But I hung out for a while. I gained a lot of weight because I was mad at the world. But at some point, you have to pick yourselves up and get going again. So that's what I did just a little over 6 years ago now with Prime Capital Connections. And so I'm assuming everybody can see the screen here, so I'm going to go down through this. And so what do angel investors look for in startups? That's what Jim wanted me to talk about today. What do entrepreneurs need to know? That's obviously a subtopic of that. And the biggest thing that most entrepreneurs that are especially first-time entrepreneurs don't know is how to determine and to defend the valuation of your company. So let's talk through some of this a little bit. And by the way, down at the bottom there, if you see the kind of the red asterisk above how do you determine the valuation of your company, down in the bottom there it says I have a workbook I can email to you to help determine the valuation of your company. I've got that on my my desktop right now. And so if you, I'm going to give you my email address, and if you would like a copy of that, please write my name down, and I'll be happy to do that for you as soon as we get off this call. So my email is mknight, and that's KNIGHT at primecapitalconnections.com. mknight at primecapitalconnections.com. So when we're done, if you shoot me an email, if you'd like to have a copy of that book, I'll be more than happy to send that to you. Okay, so a little preface before I go through. I think I only have 5 slides or something like that. This is really not a complicated topic at all. But understand that at the very top there on slide 1, you see what entrepreneurs need to know. The most important thing that you need to know out of this is that whatever the valuation is of your company, you have to know the formulas to know how to determine the valuation of your company. It's not rocket science. It's in this little booklet I can email to you, but investors will unquestionably 100% of the time make you validate the valuation of your company. So be very aware you have to know the methodology and explain to them how you arrived at that value. It won't come up initially, but it will come up, and you have to be able to defend it. All right, so I always like to say one chance to make a great first impression. If you don't know how to defend your valuation, that's going to be a problem with any investor that you work with. All right, page 2. In the greater Denver area here, you see these names up here. It looks like there's 7 of the co-working spaces that are around Denver. In whatever cities you are in, you may have others. I'm sure you do under different names. But the bottom line is that these are co-working spaces if you're not working in a co-working space in your respective city, I would suggest you join one or two of them and attend their pitch sessions and have meetings there so that you'll have an opportunity to be introduced to investors if that's what you're looking for, which is what most of us are looking for. But that's the way that I got very, very connected in the Denver area at one or all of those 7 companies that are listed up there. Those are co-working spaces here in Denver. All right. There are so many different buckets of money out there. I'll just let you take a look at that. I think there's 8 of those that are listed there. The ones I work with mostly are Angels, Angel Group, and venture capital companies. I have done some business with family offices and private equity firms as well. And if you are not well versed in how to do a crowdfunding campaign like Kickstarter and a number of others, that is a source where you can allow your friends and family to go to that website and put in $100 or $1,000 or whatever. It's a great source these days. If you don't know how to do that, I actually have 2 gentlemen here in Denver. They are for-profit enterprises, but they will build a crowdfunding campaign for you, or of course you can find it on your own in your respective town. But that is a very viable, very, very frequently used source for first funds to come in for a whole lot of entrepreneurs. Okay, comes up all the time. How do I know so many investors? I had the great fortune to work for Merrill Lynch in downtown Denver for 10 years. And about 6+ years ago, when I decided to go into the business of being a matchmaker, for lack of a better word, between entrepreneurs who need to raise money and the investors that have that money, I started calling a whole lot of my former Merrill Lynch clients and my former Merrill Lynch colleagues and my golf buddies. And by doing, and by the way, I went to college on a golf scholarship. So golf's not just a pastime for me. It's one of the passions in my life. And it has been a fabulous connector to capital as I've traveled quite a few miles with my golf buddies, flying here and there on golf junkets in the U.S. as well as outside the U.S. So I called the former Merrill Lynch clients and former Merrill Lynch colleagues 6 years ago and my golf buddies and asked them one simple question. Do you want to look at deal flow in the current environment in the United States, which is the most robust startup climate we've ever seen in the history of the United States? I had over 90% said, yes, what are you doing? And I said, well, if you're tied to 3%, 3.5%, 4%, 4.5% on money markets, T-bills, CDs, and so on, then this is a place you can make a bigger ROI. But of course, there's a higher risk for the higher reward. I still had over 90% of them said yes, that they wanted to look at deal flow. So I move in and out of all the different co-working spaces. Some people call these incubators or accelerators. They're places where there's inexpensive office space for entrepreneurs to have a collaborative environment. They figure out real quickly who their competition is, and they don't share their trade secrets with other people. But if there's no competition there, then everybody's always been forthcoming to try and help everybody out. It's an incredibly collaborative environment. All right. Aside from the work that you do on your own project, how can you participate in the largest, most robust startup environment ever? Add yourself to my eyes and ears out there. Refer me to entrepreneurs that are seeking capital. If I engage with them and raise funding for them, whatever my consulting fee, which is a flat fee is, I give you 25% for that referral. The other one is if you know investors that are active, either institutional or angels, introduce me to them, and every time they happen to make an investment in any of my entrepreneurs that I represent, I get paid and you get 25% of my flat fee. Okay, it's really, really important for this top line here of these 3 paragraphs to sink in. If you're a pre-revenue company, the Wall Street Journal prints an article at least twice per year and talks about the fact that 93%, this is nationwide, 93% of startups that are pre-revenue never make it to break even, much less positive cash flow. All professional investors know that statistic. 7% is a hard number to pick, to pull the rabbit out of the hat, if you will, as opposed to investing in the 93% that are going to fail. If you have a customer, if you have one client that has given you, has purchased your product or your service, and you therefore have revenue, you get that pre-revenue monkey off your back, and you're now no longer in that pre-revenue 93% that fail category. A lot of investors that I think are some of the most brilliant people I've ever known have tried to hit that 7% and have found out that it's painful because they end up with a tax write-off instead of a profit from it, because it's really tough. So deal flow is at an all-time high. Deal flow is defined by the number of companies coming to market around the United States these days. It's true around the world also, but that statistic is a U.S. statistic for 6 years now. It requires a little more than an 8 to 10 hour workday for most entrepreneurs. I myself put in 12 to 14 hours a day just trying to keep up with what I'm doing. But it's certainly, in my opinion, I love being self-employed. I have been for quite some time, and I really enjoy the environment and the freedom I get outside of the hours that I put in. All right, I told Jim I would make this short and sweet because I think your questions are much more important. I put this picture on here. That's me in the lower left corner with the blue jacket and the smile on my face. That woman up there, her name is Jane Roydler. She's a peanut, we call her, because she weighs about 90 pounds. And that is number 58 of all our 14ers. That was the day she completed her finisher. And the gentleman right in the bottom in the middle next to me, I met him on that particular climbing trip, and it turns out he's one of my active investors. So you never know where you're going to meet people. Everybody knows what goes on in Colorado with our cannabis industry. So for me, getting high in Colorado means being on a 14er, not anything to do with cannabis. So really, that's the end of my presentation. I realized it was short, but I wanted to leave plenty of time for questions and answers. And the reason it's short is my business model is very, very simple. So Jim, what do we do from here?
How about everyone unmute your microphone so we can hear and interact with each other? Please. Great. And Pixel, if you can if you can see us, hear us, please unmute your microphone as well. Okay. Who would like to jump in with questions for Michael?
I guess I'll go. Hi. You mentioned having any sort of revenue is a huge help to getting toward funding. Does it have to be revenue from the product you're pitching? If your company has more than one product and you're making revenue from a different product,
you could have 3 or 4 different channels of income, and if you've got income under the name of the company that is looking to raise funding for, if you have revenue from any source, that counts.
Excellent.
Is there a particular industry or several industries that you prefer to invest in?
Not really. I obviously don't know what city or state any of you are in, other than Jim, of course. But Colorado is known as a technology town. Probably 65%, so say 2/3 of all the deal flow that comes to me, and I get 5 to 6 or 7, sometimes 8 or 9 new deals referred to me pretty much every week. So let's call that 15 to 20 new ones per month, and probably 65%, so call it 2/3, are technology companies of some kind. Some of the things I'm getting are commercial real estate projects, could be anywhere from $500,000 to build a big storage facility for people who don't have room for that in their homes or whatever, all the way up to a couple of them over $1 billion, which one of those is a digital movie production studio to be built here in the Denver area. So I don't have any preferences. My only filters are, do I have investors for a particular kind of a deal?
Jack, how about a question?
I'm interested in reverse mergers. I hear that people talking about them all the time, and I've never seen one work. You know, it just amazes me that that animal is still out there.
Yeah, I haven't seen one of them come across my plate in the 6+ years I've been doing this. Interestingly enough, one of the deals that I was working on back probably 10 to 12 years ago was a reverse merger. And those of you who don't know what that is you buy a shell corporation that, you know, they actually were a public company at some time, but they didn't make it. And that let's call it a NASDAQ symbol, could be worth a lot of money because it takes a lot of money to become part of NASDAQ or the New York Stock Exchanges even more. And the board of directors puts the symbol for that on a shelf, so to speak, not literally, but figuratively. And you can buy that for 15 grand, 20 grand, 30 grand, and reverse yourself under their stock symbol and go public much cheaper and much faster than you can through the normal process. But I haven't seen one of those in way over 10 years. I don't know that they're very popular anymore.
Well, they're still out there, and for the life of me, I can't figure out why you would take all of the skeletons in the closet just to get a stock symbol.
Okay, well, there's such a thing as a clean symbol you can reverse merger into, and there's ones that have all kinds of bad stuff all over them. And so most people have to go to an attorney because they don't have the legal knowledge to know whether it's a clean stock symbol or whether it's got a lot of hair on it, so to speak. I haven't seen one or heard one, but I'm not watching that sector of the market much in quite some time now.
Okay. Pixel, do you have a question? I'll type.
Looks like Royce disappeared.
Michael, I have a question, then I'll jump in. You talk, and I know this because you and I have spoken about this many times. When you say that the biggest single problem that entrepreneurs looking for funding have is they've not correctly valued or in the pre-money valuation, if I remember correctly. Could you explain, elaborate, detail, what do you mean by pre-money valuation and what mistakes do most entrepreneurs make when calculating pre-money valuation in pitches to you and your fellow angels?
Valuations are a very arbitrary thing, beauty in the eye of the beholder, so to speak. The higher you place your valuation of your company, you better be really good and be able to defend it. It has to do with your revenue, the size of your go-to market sectors that you're going to sell your product. It's based a lot on projected revenues, which we all know what that is. It's a best guess. Let's just say beauty in the eye of the beholder. Between the investor who's looking to put money into your company, what they think it's worth and what you think it's worth are rarely the same things. So there's a negotiation point, that you kind of have to meet in the middle, if you will, typically. And the more that an investor can push down your valuation, the more shares they're going to get in your company for every dollar they put into it. There are classes that are given. I mean, in the greater Denver area right now, I think there's 17 different co-working spaces. And I'm including Boulder and Fort Collins and Longmont and Colorado Springs and the Denver suburbs as well. It's interesting to know that 6 years ago there were 11 and now we have 19 of them. So obviously that's a boom as well. There are classes that are taught at Rockies Venture Club and at Thai Rockies and some of the angel groups about how to determine your pre-money valuation.
Okay.
I guarantee if an entrepreneur went to, let's say, 5 different of the co-working spaces and have 5 different people or teams, they would come up with 5 different valuations.
Got it. Okay. Thank you. Chris, fire away.
Think of how to ask this question. So for lack of a better term, right now I'm a single parent. In a sense, I don't have any sort of co-founder or team. I have a prototype of my product out there, but everyone tells me you got to find a co-founder. You got to find a co-founder. No one will touch you without a co-founder. And I just have no clue where to find. I mean, I'd be having to approach strangers to do that, and I'm not really sure if you have any advice for going about that, or is it really a problem to be a single parent entrepreneur, for lack of a better term?
Before I answer that, what city are you in?
Denver.
Okay. Good answer, by the way, because I know Denver is a startup town better than any other startup city that I send deal flow to or get deal flow from. They're not hard to find, but where you have to go, I mentioned earlier that we have 19 co-working spaces in the greater Denver area now. There are people inside, particularly Rocky's Venture Club and Thai Rocky, that are large angel groups. Rocky's Venture Club is by far the largest in Colorado, one of the largest angel groups in the United States, for that matter. They have what they call mentors, Sherpas, and subject matter experts that for a fee, and I don't think it's much, but it's to be negotiated. There are a lot of people that would be able to help you with that.
Okay. Can I jump in for a moment, Chris? I don't know if I have you, I must have your email, but a shameful plug, but this is what we're all about. Have you joined the 4Gen Now Denver meetup group?
Yeah, and I'm planning on coming this month.
Awesome. Okay. And just by being part of the 4Gen Now community, we recently launched something on the website under bulletin board. So you can actually post what you're looking for, who you're looking for when it comes to a potential intergenerational co-founder. And that's something that, you know, as a nonprofit, this is what we're all about, is connecting our members and helping everyone find their intergenerational business partner, then providing services to help once they launch the startup to help grow the business, and then hopefully get to a point sooner rather than later that you're speaking seriously, meaningfully with people like Michael to get you funding.
Thank you.
My pleasure. Jack, another question. Royce, another question.
Okay, this is Jack. My background is actually in private equity, not in venture capital, and I never really understood venture capital. Valuation process in private equity is much more dry. You know, and it's multiple on that, and we can play out the multiple. But your EBITDA is a number, and you know. And I used to send people that had venture capital type deals over to some of my friends that were in venture capital, and these entrepreneurs would come back and say, "Jack, that guy's a shark. He's terrible, and he wanted half of my company." And I said, "Wait a minute, let's stop right now." I draw a little balance sheet, and on the left side, I'd have 0. On the right side, on the top, I'd have 0. On the bottom, I'd have 0. That's you right now. Now, this guy that I introduced you to has $100 in cash on his left side, and he's got 0 liabilities at the top on the right, and $100 of equity on the bottom. You're going to form a new company, and that new company is going to have $150 in assets, because some people will work with you now, and you get $50 of liability, you know, your vendors and what have you, you know. And so there's 100 of equity, and that bastard had the ball to ask for half of that. And,
Michael, you want to reply?
Huh?
Mike, thank you, Jack. Michael, do you want to reply? How can that be?
Yeah, and I don't know how many people on this call, but I bet every one of us, maybe not as religiously as I do, have watched a few episodes of Shark Tank. that has everybody at least seen that a few times, so we understand what goes on there. The valuations are almost always questioned, and I'd say at least 2/3 of the entrepreneurs come in with a valuation that they cannot defend, and the sharks eat them alive. But valuation is one of those things where beauty is in the eye of the beholder. There is no 100% right or wrong about the way you value your company, and it's almost always a negotiation. If you watch Shark Tank, the next time you watch it, I can almost guarantee you that in a 30-minute episode, you'll see a disagreement going on between the sharks and the entrepreneur that's up there trying to defend their valuation. It's beauty in the eye of the beholder. There is no right word about how to do that.
Well, when I look at Shark Tank, these guys are buying options because the amount of money going into the company is not enough to sustain it. If you look at the DuPont equation, it takes money to make money. And that DuPont equation shows you how much. What is your asset turnover? If these guys hit a couple million in sales, they're going to need inventories and receivables and a forklift to move them around. That's when the shark is going to get really tough because no one else is going to come in to provide the equity at that point. Okay. And so that's when they're going to drive their really tough deals.
That's right. Yeah. And, you know, Shark Tank is theater on TV without question. But I've sat through a few, and that's an understatement, of pitch sessions and watched that discussion or that argument, if you will, go back and forth between people, how shall I say this, very educated, and I'm not talking about college educated, I'm talking about hard knocks in the world of raising venture capital, startup money from anybody for that matter. I've watched them go back and forth with an entrepreneur that's incredibly bright. A lot of them have MBAs, and invariably the entrepreneur has to back down because they need the money. Now, there's a couple of them I've seen that just drew a line in the sand and they said, well, your valuation doesn't mean my valuation, so we've got to agree to disagree, and they end their conversation with that particular shark, if you will. I see that go on in the incubators around the greater Denver area all the time. There is no right or wrong. There's only a negotiation, and you can either meet in the middle or you can't.
Okay.
Michael?
Yes.
Meeting in the middle is not negotiating. Meeting at an appropriate point. There's no rights and wrongs. I understand that, but I think it's inappropriate. And some of these 100 times book deals are inappropriate.
I am not going to dispute what you just said. It is a negotiation, and typically it all boils down to how much of the company is the entrepreneur willing to give up. If they feel that they've got the ability to keep more than 50% of it, they're certainly going to try to do that. I watch Shark Tank, but I think it's more theater than anything because none of those people, whether it's Damon John or Mark, why am I not remembering his name from Dallas? Mark Cuban, Lori Greene, they're in it to make money too, but this is theater. This is television. This is not what I see in the Shark Tanks around here.
Okay. Alrighty. Royce, you had a
Michael,
question?
I have a question.
Sure.
When someone approaches you to take an equity position, what are some of the best practices or things you look for before you say yes?
Repeat the last part. What are some of the best what?
Practices.
Thanks, Jim.
Best practices. Best
What are
practices
some of the best practices, and then what?
that you look for.
Just in terms of the way they run their companies, is that what you're asking?
Anything that's important to you when you're approached about taking an equity position?
You know, this also goes into beauty and is in the eye of the beholder, in my opinion, because if I'm talking to an entrepreneur, and I don't care if I'm watching it on Shark Tank or whether I'm doing it live or whether I'm in a pitch session at one of the the co-working spaces here, if I really like that company, I'm going to want equity because I'm going to want a triple or a home run out of that. If the company goes down, if you have equity, you lose everything. If it goes up, typically your ROI is going to be higher than anything else that you can do. So it's really, as an investor myself on occasion, I would tell you that equity is what I always go for. One of the things that a lot of people are trying to do these days, in the Denver area at least, is do convertible debt. Part of what I'm going to send you, for those of you who are going to send me your email address after we get off this call, I'll send you a document that I talked about that goes through all that, and you'll be amazed at one of the things in there. It talks about why never, ever, ever, ever to do convertible debt. And in Denver, up until about a month ago, when I found this article, and I'll tell you in a minute who wrote it, I always thought convertible debt was a very attractive thing for entrepreneurs to do. But the person who wrote this article, his name is Peter Adams, and he's the guy that's the president of Rockies Venture Club, the largest angel group in Colorado by far, and one of the largest in the country, I'm told. He's a Harvard guy. He knows what he's doing, well known, well respected. And he wrote this article basically telling people, don't ever, ever, ever do convertible debt. I think you'll enjoy the article.
Okay. Michael, I'll jump in with another question. So, and Chris, thank you for your candor, everyone, their candor. So, Michael, and I'm in a unique situation, which I love, is because we're trying together as a movement to find intergenerational co-founders, and then we need to access capital at the appropriate point by meeting folks like you with integrity, success, and professionalism. But how does Chris or anyone that doesn't know any angel, or I had not known of an angel investor before you and I met. But how does somebody go from a great idea, and let's assume that they have that they already have some revenue. They have one customer or a couple of customers. How do we get in front of you? You're inundated, I know, with entrepreneurs pitching you, both at pitch sessions and just contacting you on their own. What do you look for most before you will even get on a call with an entrepreneur to hear their pitch?
You're speaking to me, Jim?
Yep.
Okay. I have two criteria, and they're very simple. Whatever the deal is, whether it's a product or a service, has to make sense to me. And I have to believe that there's a fairly large market for it, understanding that's a subjective thing, different for each of us perhaps. And number two, most importantly, I have to feel like I have investors for whatever that is.
Okay. Sorry, Michael. Understood. What I'm trying to get to is, are you looking for an elevator pitch? Are you looking for a one-page executive summary, a two-page executive summary, before you will ever take a face-to-face with an entrepreneur?
Okay. I apologize. I misunderstood your question.
No, I didn't verbalize it clearly. My bad.
That's all right.
Before you will get in front of people like me and Chris and or Jack or anyone else, Royce, that believes 100% what we're doing, you need to filter. You filter everyone out. So help us help each other. How do we get through to getting a meeting with someone like you?
This is a Jerry Maguire line. Help me help you, right?
Yeah.
There's three things that every investor that I've ever worked with, and not all my investors by any means are in Colorado. They are across the United States. They want three things up front, as long as what I'm sending them is in one of their sweet spots. And since I have a profile on every one of my investors, I know what their sweet spots are. So what they want is an elevator pitch, the proverbial elevator pitch, a 30-second read. Obviously, the entrepreneur has to have that memorized, because if you're meeting face-to-face and I introduce them, and the first thing the investor is usually going to say after shaking their hand is, what do you do? And you got to be able to just fire it off like that. It's got to be, second nature. So the elevator pitch is there, and then a 1 to 2 page executive summary, and then your pitch deck, which a lot of people just refer to as the deck these days. I've seen decks way too long, pushing 20 pages.
What should the deck be? What's the maximum number, Michael?
I would say 15 max, and if you can get it down closer to 10, much better.
Okay.
I've seen a few up around 15 pages that without 15 pages, you would not have been able to understand the full scope of what they've got. That's an exception rather than the rule. So when I put these things out, one deal at a time to each investor, I cut and paste the elevator pitch and drop it into the body of my email. And the first attachment then that they're going to read is the executive summary. And the second attachment is the pitch deck. In the subject line of my email, it'll say XYZ Company, equity capital raise, or I'm probably not going to use convertible cap raise anymore because I'm going to discourage it after that article that I read, which you guys will get. So equity capital raise, or let's just go with equity capital raise for now, $5 million. And I will give then I give the name of the entrepreneur, and everybody's got the emails and the phone numbers, and they can exchange it from there. The investors will look at these. Typically takes 3, 4, sometimes 5 business days because of their backlog. Like I said, we have record deal flow in the U.S. now. So it works its way to the top. 3 to 5 days later, I'll get an email that either says, we like this one, please introduce us to the entrepreneur, or they'll say, we're going to pass on XYZ Company.
Okay.
That's all they want to see up front, because they have that fire hose of deal flow coming at them. And that you've got to give them the great first impression and give them the right info in order to get an invitation to be introduced.
And so the elevator pitch, before you take a meeting, Michael, will you get on a phone with somebody?
Sure.
Okay. And when you say an elevator pitch, you're talking about one sentence, 15 seconds? What are you talking about?
30 seconds or less as a read. My elevator pitch, people ask me what I do. I'll tell them I function as an investment banker. I connect entrepreneurs who need to raise capital to start a business or expand a business to the right sources of income.
Okay.
That's it. I mean, that's a 15-second elevator pitch, but they get it. They understand it. They ask questions sometimes, and I can elaborate a little, but that's the gist of it.
Got it. Question from, and thank you, Jack. Jack is in high-grade charcoal used in farming as a soil component, looking to export. Michael joined us via phone, I think in Nashville. Robert is involved in fashion, but Andrew has a question. What actually goes in an executive summary, high level? What goes in there, Michael? What are you looking for?
Well, first of all, it's very regimented. It's an 8x10 piece of paper saved as a PDF, of course. And there's a column on the left side that's about an inch wide from top to bottom. And in that, typically, only about the top half of the column has info. But it's the name of the CEO, the city they're in, the amount of money they're trying to raise, whatever the vertical is they're in. It's a biotech deal, whatever, the amount of money that they're looking for. So typically, that left column is only about info at the top half of that column. So then you have 3 rows that are on the right side of that left column, if that makes sense. And this is easily 3/4 of the page because the column is pretty skinny. They basically have their elevator pitch written in there on the top, and then they will excerpt the most important things from their executive summary. So it's a synopsis of the executive summary, and then there's an attachment, which is the full executive summary. And then at the very bottom which is the bottom of the 3 rows, it's a little bit random. I see a lot of different things, but it's just further explanation or expansion, if you will, of what's in the top part of that.
Okay.
Right in the middle, which is actually 4 rows, that are about the same thickness. So let's just try to hold my hand up that there may be like, an inch and a half long or inch and a half tall. So there's one and then two, and then there's the third one at the bottom. But in between the second and the third one is a skinny little row that has 5-year revenue projections, top line revenue projections. And right underneath that is the 5-year EBITDA projections. Now, behind revenue and EBITDA projections, there better be a full pro forma. Otherwise, that means you just pull those numbers right out of your know what. And they'll figure that out in a hurry.
Okay, got it. Thank you, Michael. Sorry, I'm jumping around trying to, don't mean to cut you short. Julian, you have a question. Ask Michael, please.
So, Michael, you just listed the 3 things that the investor looks for. My question is about what happens when you're working on a technology where all of those 3 steps cannot possibly represent it. So to clarify a little, my project involves cognitive science, which means that to get any bit of the point of what the products are going to be, the investor would actually have to try a phone app or something where they use their cognitive abilities. Otherwise, it's a flat pitch deck, which is making promises like every other pitch deck they see.
Well, pitch decks are one-dimensional, obviously, whereas a human being, face-to-face, a little different thing, and your Q&A can go back and forth far more easily and branch outside of what's contained in a pitch deck and or outside of a one-page executive summary. There's no magic here. It's just you've got to give them enough in the executive summary and supplemented with more detail in the pitch deck in order to get them to agree to a phone call, a Skype call, or a face-to-face.
Michael, do you have an executive summary? Obviously, without divulging anything privately. I mean, is there like a little template if anyone's interested that you'd feel comfortable sending or no?
Yes, I do. I have a blank template and I have 3 samples that I have permission to use.
Michael, that would be awesome. If you wouldn't mind, if anyone who's interested, if they could just email you, right? And
yeah,
then that would be awesome.
Yeah, email me. You're probably already have it because you guys were going to send me your email anyway. But yeah, I can certainly do that. So just include that in your email or do a separate one if you've already done the first one.
So I'm going to type in your email, Michael, just so that everyone has it, because I know you gave it, but in case some people came in, it's M Knight. That's M, for those listening, MKNIGHT at Prime, PRIME, capital, connectionsplural.com, correct?
Yes.
Who has another question? Julian, tell us, sorry to put you on the spot, Julian, tell us a little bit about more. Are you in the process of raising money? Have you, how long has your company been around? I'm curious.
I've been fiddling with it for just about a year. And I'm at the point now where I have demonstration technology, but it's not saleable. And so I'm trying to find enough money to turn it into an actual product.
And what's your background? I'm guessing you have a few years in cognitive science?
Yes, also 3D computer graphics, virtual reality, augmented reality, and extensive background in IT and knowledge management and semantic technologies.
Michael, have you done deals in that space? I've got one that it may be a little different, but it's, I'm trying to think of the acronym they use to call it. Most of us, I'm guessing, have seen movies with Mission Impossible and or the Avenger movies where they've got these what look like clear screens in front and they're moving things around and all that with their hands as opposed to a mouse or whatever. And then they can sweep it to the right and it goes from one screen on the left to one on the right. That is actual total fantasy made up by Hollywood. It obviously never happened. But there is a guy here in Denver, interestingly, who actually now has that technology where you can do that. It's one of the most fascinating tech deals I've ever seen, and he's probably going to be bringing that to market in a matter of the next couple of months.
So that's close. Actually, one of my pitch lines is that I'm doing Minority Report, except that I'm doing it right and I'm doing it for real.
Yeah. Yeah. It's he demoed it for us. It was fascinating.
Okay.
Um,
Chris, I'm mindful of everyone's time. Michael, if you have a few more minutes, you let us know, but we're almost at 45 minutes. I'm enjoying it. I know I have some more questions. Do you have a few more minutes or do you need to cut away?
No, I'm good.
Great. Chris, Jack, Julian, or anyone who's listening on the call, please fire away with some more questions from Michael.
I'm honestly still at the point where I really don't know what I don't know. So if you have other questions, you probably have better ones than I do so far.
Well, as Michael knows from me, I ask a lot of, basic questions. So we're all in this together. Julian, any other questions for Michael? And have you raised capital yet?
no, I'm actively working on that now. And what Michael said just a couple minutes ago in response to my first question about how those first three steps, it looks like I have to figure out how I can get enough candy dangling in front of the investor in those first three steps in order to get that face-to-face meeting where I can really demonstrate something.
So, Julian, you have the pitch deck, you have the executive summary, yes?
Yes.
You have the pitch deck?
No, that's what I'm struggling with is what I was bringing up earlier in that you need to actually experience the technology in order to get the point. Otherwise, it's just another pitch deck.
But, okay, Michael, you want to address that? So Julian has a lot of experience, but he doesn't have the pitch deck. So just, is that a deal breaker before you would agree basically to meet with someone like Julian?
Boy, that's a toughie. I've never talked with an entrepreneur that doesn't have a pitch deck. That's a first.
What I was actually thinking of was a pitch app instead of a pitch deck.
Ah, okay.
A pitch app?
Yeah.
Interesting.
I'm not sure I understand what a pitch app is. That's a new one.
Well, a pitch deck is a PDF or PowerPoint, right? So a pitch app would be starting with the essence of what a pitch deck is, but because it's able to demonstrate the technology, that would be the pitch deck merged with the demonstration of technology.
Is it a video?
No, an actual phone app.
Wow.
I just walked into new territory here. I'd have to see it to understand what you've got.
Yeah, that's the whole thing about my technology. It's definitely a Missouri thing, right? A show me.
Oh, okay. Yeah. I don't know. Is this something you can email to me?
Good question. I'd have to find out.
Okay.
There's technological barriers, so I have to check into that.
Yeah, I'm happy to sign an NDA if you want me to do that, but you've certainly got my curiosity piqued.
Okay.
Awesome.
If you have time, I have a question. Andrew Martell.
Hi, Andrew.
Hi, yeah. So I guess it's kind of a little bit multifaceted, but I've heard one that a lot of investors tend to be less likely to care to listen to what you have to say or to give you funding if you are alone, if you don't have a co-founder, because they like to see that you've been able to, get that like wholehearted buy-in from somebody else who's willing to, put their blood, sweat, and tears into a project just like you are, to show that there's some traction behind the idea, and really just to show that you have a more diverse array of skill sets to help build out the product as you try to expand. One, like, do you tend to kind of agree with that or not? And two, how do you go? I've had a hard time getting people, to give me that level of buy-in without me being able to, like, they want a salary. They're like, I'll come co-found with you, but I need a salary. I can't take equity, or I can't take sweat equity. I can't contribute my own funds. And that's been really tough for me.
I've not heard of, and again, 75%, give or take, a little bit of my investors are here in Colorado where I am. I do have quite a few outside the United States, but not nearly as many. I mean, I've been doing this for 6 years, and there's not one co-working space in the greater Denver area I can walk into to where people don't say hi, Michael, to anymore. It took a while. The first 2 years, it was like, who's the new guy? But no more. But I've never seen an investor turn down engaging with and getting into some initial due diligence because you're a solopreneur and don't have other partners in there working with you. What city are you in?
Dallas.
Okay. Well, I'm not going to say anything bad about Texas. That's my home state. My wife's home city. I've never seen that. I've never heard that before. I think that's pretty unique.
Interesting. Okay.
Have you tried to engage with either any of the angel groups in Dallas or more importantly, a trip down to Austin, because they have an incredibly robust technology startup environment in Austin?
So I've been trying to go to networking events 7 days a week if I can find them. And I have met a pretty good amount of investors at these events. And when I follow up with them after the event, they just tend to never respond. And I'm not quite sure why. I've actually, I give them my verbal elevator pitch and then almost always they're like, wow, I really love that. Like, tell me more. And as I tell them more and more, they're like, wow, that's actually a really awesome idea. Like, we need to talk. And then they just disappear.
Interesting. That's a first for me. I've not heard of somebody getting on a phone call or having a face-to-face and then disappearing if they were expressing interest in what you've got. I will tell you that most investors that I work with up here in Denver, as well as on the phone, will tell somebody in the first 5 to 10 minutes, this is in one way or the other, they'll say, I really like this. Let's move forward. Tell me more, whatever. But I've almost never heard anybody say, go away in the first 5 to 10 minutes. That's, I don't know. I don't know what to say about that. Texas is a pretty friendly state, but it's a very robust, crowded space, if you will, for the right capital.
Yep, that's true.
Okay, pardon me. We have Andrew. I can follow up with you. We can maybe brainstorm, and you have Michael's email to just follow up with him. We have a question from Michael, I think, in Nashville. He's not sure if we can hear him. He has a product. Michael is a developer inventor with a new company, and he has a few non-related products that he's working on, with one in particular that he may be looking for funding. Here's the question. Is it realistic, Michael Knight, to get funding for only the one product under his company umbrella, or should he start a new company for that particular product in order to retain full ownership of the other ideas?
All of these companies belong to, and I'm sorry I didn't get the first name.
So his question is it realistic for him to get funding? And you might be able to see it in the chat box, Michael.
I cannot.
Okay, no worries.
I don't have a chat box that's showing up here.
No worries. He's asking, is it realistic to get funding for the one product under his company umbrella, or should he start a new company for that particular product in order to retain full ownership of the other ideas?
A lot of stuff.
I don't know if I have a right answer for that one. I've not heard that before. Why would you not go forward with the original company you started?
Let's see if, okay. We'll see if Michael's still on us. And if so, Michael, perhaps you can reply to Michael Knight's question and I can read it on the chat box here. Have a message, if you will, from Acel Ramirez. Are these generic networking events? I'm guessing that you're talking about the WeWork. I recommend looking for an angel investor group or startup events. I hear Austin is the next entrepreneur hub. Maybe check out startup groups. Andrew, perhaps that was in response to you, Andrew.
Yeah, I think it was.
Okay. How about another question from somebody? Fire away. Julian, Chris, Jack, any final questions?
No final questions. I'll send some emails. I have some things that are more technical.
Okay.
Awesome. Julian.
No, I don't have any mental turmoil about how to come up with that right candy. So.
Well, Michael Knight, Michael's graciously agreed to, you guys can exchange emails and create some, a whole new, or to disrupt the whole process of interacting with the angel investors. The nixing the pitch deck and saying hello or introducing, what did you call it, Julian?
Candy.
Oh, no, the app.
Actually, it'd be Carrot.
The app that you were talking about.
Yeah.
Oh, I don't have a name for it yet. My pitch line was that I'm doing Minority Report, but I'm doing it right and I'm doing it for real.
Okay.
So I have one more thing I want to show you guys. I got this in the mail yesterday.
Michael, hold that thought. Michael from Nashville, I just in the chat box here that I know you can't see. I guess this is a question to everybody. So Michael looks to retain 100% ownership of a few products that he does not need funding for. However, he's willing to divide ownership with investors for a different product. His question, Michael Knight, is can I keep them all under my company name, or will the investors require ownership of all products under the company name? If you follow that. No?
Beauty in the eye of the beholder again. Every investor is probably going to have a different way they would want to approach that. There's some moving pieces there, so I imagine that's just depends upon the investor.
Okay. Okay, Michael, go ahead. You said you had one final slide.
Well, not a slide. I'm going to hold it up in front of my camera here in just a moment, but it was in the mail yesterday, and it took me about 5 minutes to sign up for this. I don't know if anybody can see this. Can you tell who this is?
Jeff Bezos, maybe? No, that is not him. That's the guy from
Damon John from Shark Tank. He's going to be in Denver February the 28th, way up north and one way south, and I'm way south. So I've already signed up for it, and it looks like I'll get to meet the guy.
Oh, really?
Yeah. Yeah, so that should be fun. It's a 4-hour seminar. I doubt that he'll have a huge chunk of that time himself. He'll probably have other people as well, but I'm guessing that they mail this out to a fair number of cities, not just Denver.
Interesting.
That'll be fun to meet him.
Definitely. Michael, thank you very, very much. Jack, Chris, Andrew, Julian, and those on the phone, thank you very, very much. We're, we want to do more of these webinars, and I hope if it's okay if I follow up with everybody for a quick survey, what they like most, what we can do to keep these more and more engaging, what you liked about it, because we're looking for feedback. And you have Michael's email, people have my email, and we're looking to continue our engagement to facilitate and inspire 4 generations of entrepreneurs to launch startups together. So thank you. Thank you, Michael Knight, very, very much.
Appreciate the time from everyone. You're welcome.
Thank you,
you,
Michael.
Julian. Thank you, Andrew, Chris, Jack. Thank you.
Thank you.
Okay.